we got ourselves a stock market rally, which is great. But what's not great is apparently, well, not only are possibly as many as 300 people dying in Hong Kong due to an apartment building fire, which is absolutely terrible, drives me nuts because I live fortunate to, knock on wood, live in a house with fire sprinklers, but fire just scares the crap out of me. But on top of that, you've also got apparently somebody who shot two National Guard members in DC, which is wild. Both of them are in critical condition. One of them was shot in the head. Absolutely devastating. Really terrible to hear. So very curious to see why the hell this happened, especially since the National Guard has been deployed without lethal firearms, basically just crowd control weapons. So very disappointing. And then on top of that, the market, I mean, we're almost back to 90,000 Bitcoin. It almost feels like we're hitting a little bit of a ceiling right now. Kind of bizarre, right below that 617 ceiling on the Qs and right below 90K. Nice bounce back here on the day chart, but capping out right below 90K there on BTC. Though if we hit that 1 minute chart, we did briefly get back over 90 to 90,400. So nice sort of $10,000 reversal here. Some of this might be because of the beige book. And so I want to take a moment to look at the beige book, because we've got somebody's now mentioning that one is dead. Somebody else is saying they're both dead. I know they are both last reported to be in critical condition, but it's absolutely terrible to hear. Not to awkwardly switch topics, just out of respect for your time here. I just want to keep things moving. We're going to hit the beige book right now next. But I will say I took a little break. I went to the gym. Can you imagine that? I took a break and I did some emails and some other stuff. And was working on some server setup for some of the stuff we're doing with HouseHack and our AI. And I was listening to The Economist. And The Economist, they had this 30-minute podcast where they interviewed these AI bears, and they're like, well, we need to start seeing revenues from these products. Like, where are revenues going to come from all these AI businesses or whatever, like all this AI CapEx spend? And then I'm like, well, in fairness, I tweeted this. I mean, Elon doesn't really share my tweets, so we kind of just talk about him here on YouTube anyway. It's just a way to sort of document him, but you can follow me there at RealMeKevin. But anyway, I go, ironically, I'm listening to The Economist talk about where are these AI revenues going to come from to support artificial intelligence CapEx. And we're literally seeing wild revenues, and we're just a tiny little startup. Like, I wrote this, I go, Jesus, I knew people liked AI and AI stocks, but after we announced our AI product yesterday, we're literally seeing dollars skyrocket. Holy smokes. That's like what our reinvest lifetime, AI product looks like. And it's crazy. Like, I'd say 90% of this is just this explosion from the AI product, which, we're selling that over at househack.com. And that just is trouncing. I mean, people are still joining, of course, the Meet Kevin membership, but I would say that line is almost completely reinvest AI, because people are like, bro, we want AI products, and people like this AI product. And so for me, I'm kind of like, dang, is that bullish AI, right? Because it's no, people do want to invest in some AI tools and products, especially ones that could potentially blow up their net worth. So it's pretty cool to see, and I want to share that with you because I feel like it's at least somewhat of an AI indicator of there can be AI revenues, right? There can be both National Guardsmen who were shot have died. Oh, that's terrible. Yeah, that's effed up, So I don't know what happened. We don't know. I mean, if somebody just walked up and shot him or something to make a statement or something. It's really, really sad. I don't know. It's sad to hear that. But anyway, to some extent that AI revenue, companies actually generating artificial intelligence revenues help justify some of these quote unquote bubble talk ideas in CapEx, right? Because for example, us, what have we spent in AI CapEx or AI spending? Maybe we've spent, so far year to date, a few $100,000. But if our revenues multiply way past that, that it's kind of like, okay, but that's ROI, so it's incredible. But anyway, beige book. So let's take a look at the beige book. What I really care about at the beige book is employment. And so I took a brief early look at this, and this is actually decent because it says employment declined slightly over the current period, right? So no cliff, no jobs cliff yet. That's very critical to kind of keep the market bullish and to keep that bullish catalyst going.
Bullish catalyst.
Around half of districts noted weaker labor demand. Despite an uptick in layoff announcements, more districts reported contacts limiting headcounts using hiring freezes, replacement-only hiring, and attrition rather than layoffs. This is good. No jobs cliff yet, and no widespread layoffs equals delayed beverage curve normalization, right? We don't want that curve to normalize. That curve normalizing means unemployment rate skyrockets and recession. So we're not seeing that yet, which is good. Now, maybe they're just missing the boat. Maybe they're just late, right? In addition, several employees adjusted working hours to accommodate higher or lower than expected business volumes instead of adjusting the number of employees. So sort of like changing the dial on hours worked rather than staffing, like just slicing people out. Few firms noted that AI replaced entry-level positions or made existing workers more productive or productive enough to curb new hiring. Yeah, I mean, this is totally reasonable. I mean, we're seeing it ourselves, like, just technology tools are making us so much more productive and efficient. That doesn't necessarily mean we won't have to keep hiring in the longer term. Like, that's can't just have AI do the job, but an AI, like a dev with AI is a very powerful dev. So anyway, prices rose moderately during the period. So it kind of explains why the Fed's probably, I think this beige book is setting up for a hawkish D's 10. So I'm going to write that down, hawkish D's 10. This is what we talked about in my video earlier. Important, I think you watch that full video on sort of the bullish catalyst or the bull trap. And that's because we'll probably get a 25 BP cut, then pause. And, if that's a 6-month pause until Hassett, that could create a little bit of bearishness in the near term. Now, so far, things are, we've had a great rally today. We've got a little bit of a relaxation coming into the end of the day here. However, Duolingo is holding on to some of its enthusiasm. You've got Tesla almost made it to that 433 line. In the Alpha report, we were enthusiastic that if Google could actually not go heavily negative, maybe we could see a rally at Tesla. Google's still minus 1% though, so a little bit of that like tempered enthusiasm is the way I'm calling it. This is probably healthy, right? You're not seeing like crazy euphoria. Crazy euphoria, I think, would be Google not only already having been up 10%, a whole AMD, but then rallying even more, right? So we're not seeing that crazy euphoria, kind of just trying to get back to stability. Still can't make it back to 232 on AMD, but slowly coming back. Six Flags, mostly flat on the day. Chipotle, mostly flat on the day. Dave & Buster's is the one that, honestly, this is getting a little meme-ish here, and it could be the start of a meme rally. It's one to maybe pay attention to. At $13 to $17, this is nothing. Volume still very, very low. But if we're gonna have a meme rally and a meme bounce back, a $600 million market cap company here, this is a very similar setup to what we saw at Open Door. Open Door, which I think has a very bad business model, although their technology is not bad. This is what we saw at Open Door when Open Door was trading for 50 cents, 60 cents. I remember analyzing it in an alpha report in a course member live stream. I'm like, guys, Open Door, it's gone to like 60 cents. It was at 47. This is the start of a trend. We should start watching this, and then it just like meme exploded, which is phenomenal. Dave & Buster's might be an early setup for that, so something to watch. Robinhood right now testing the 127.26 line, also impressive, so we'll want to keep an eye on Hood to see if he can get past that 127 line. Now, keeping on with that beige book, we've got, we're just sort of looking broadly, price pressures, Contacts anticipate upward cost, but plans to raise prices in the near term were mixed. This is called margin pressure right here, right? Margin pressure, it's somewhat nominal, but a margin pressure can lead to layoffs, but we're just not seeing it at such a level where it's like, oh my gosh, it's all falling over or whatever, which is good. It's sort of indicative of stability. I like that. Stability so far. Nothing scary in the beige book. Overall economic activity, a little changed since the previous report, which is good. Now, if we go through to some of the individual sectors, you see Boston, employment edged lower, no major layoffs. New York, employment fell slightly with some layoffs. Philadelphia, employment levels fell, okay, so we'll go ahead and make that one yellow. Price pressures low. Okay, what do we have over here? We got Richmond, employment levels little changed. Employment levels flat at the Atlanta region. All increased slightly, so slight increases in employment in Chicago, so that's bullish, right? Increased slightly. Employment levels remained unchanged. I mean, that's how you get a soft landing, right? Employers reported marginal reductions in headcount. None of this is a sign of falling off a cliff. Firms remain optimistic about employment growth. Employment fell on net in Dallas. Okay, so less desirable here. Ideally make that yellow. There we go. Employment levels largely held steady in San Francisco at the San Francisco Bank, so West Coast. So again, as you look at these annotations here from that Fed beige book, nothing telling you we're falling off a cliff. This can very much reiterate, certainly bullish through December 10th. Could be wrong, but bullish through September 10th could also open the door to some memeing in some stocks. We'll see. There could always be some kind of very negative catalyst that pops out. Tesla rallying right here. Keep in mind, after coming back, regaining that 414, the next line over here is 433.99. Could be a level that we hit by Friday. Remember, the stock market is closed tomorrow, so we'll be betting on that hit on Friday with no bad news, like no kind of like bankruptcies or private credit disasters or whatever between now and Friday. The National Guard, Guardsman disaster, obviously highly disturbing. Video footage shows supposedly showing the aftermath of the shooting. Oh, well, let's take a look at this. I'm going to pull this up here so we got maybe a little bit of footage of what happened here with the chat says, wow. Symbotic's been one. Man, I've been like shilling Symbotic since it was like $20 a share. And Alpha report for over a year. We've been analyzing Symbotic. And even yesterday we looked at it and we're like, damn, this is a high margin a play in pseudo manufacturing, because they sort of half manufacture, a little more complicated, but great balance sheet, great growth, great setup with Mexico, with Walmart Mexico, great pipeline, up another 13% today. Really incredible. Full analysis in the stock tab for those of you in the Meet Kevin membership. If you're not in it yet, remember, join at meetkevin.com and you can get that. Let's look at that Guardsman video here. What do we got? Hold on a sec. Let me see if I can get any audio here. Okay, so you can see somebody zooming in over here. Looks like they're tackling somebody. This might be the video, possibly where they're tackling the suspected shooter here. Let's go ahead and get the closing bell and we'll come back to this in just a moment.
Way too bearish. And if we exclude tech from that, then actually bottom-up consensus saying earnings are going to drop by almost 8% quarter-over-quarter. And with such a low bar to beat, that's a great setup.
Max, really appreciate it. Thank you very much. As we head into the close, we're a little bit off the highs, but the S&P 500 still looking for a 0.7% gain. It is also a very broad rally, about 70% of all volume to the upside. That's going to do it ahead of Thanksgiving. For closing bell, we'll head into overtime with Morgan and John.
Well, there you have it. There you have the market close. So we'll be closed until tomorrow. So yeah, it looks, or until Friday. So again, does look like, unfortunately, both of those guardsmen died. This appears to be the immediate aftermath, where it looks like here they appear to be wrestling a suspect. You do have one guardsman down right here. You could see that, feet up in the air. Here's the wrestling going on. Clearly some bullets at the hit the glass here of the bus station. And then you do have another guardsman down over here. This is very sad, very terrible, and not what you would want at all of, the people serving our country. So very, very sad moment. Here's some more footage of the aftermath of where that shooting has occurred. Certainly makes me think guardsmen should be carrying lethal weapons rather than no weapons, or just the less lethal weapons. Very sad. Almost makes them sitting ducks, huh? No ability to fight back. Jeez. Anyway, so I almost had a loss for words because it's sad. Anyway, Symbiotic, very great. Again, if you want to see my analysis on that, you just go to the Meet Kevin app, click the stock tab. If you're in the Meet Kevin membership, boom, you see the full analysis there. So another 13% on Symbiotic, really incredible. Tesla on its way to 433.99. That's the next line we've been calling and waiting for on Tesla. Bullish catalyst really here through December 9th. You can watch my other video talking about this. A little bit of a slowdown going into the close here. I think absent any bad news over the next few weeks here, we should be pretty bullish. NVIDIA going mostly sideways on the day. And let's see if, look at that, we even got another little push into the close there on Dave & Buster's, almost a full 9% now. Dave & Buster's a potential, frankly, momentum rally setup. Volume still very low on Dave & Buster's, and where it's moved, on the week chart here has been pretty miserable, well below trend. So really setting up for a potential bounce here. We'll see how things move. Fat Brand's not a surprise. That it's continued to roll off a cliff. Somebody actually donated on my live stream. I think when it was like $2 or in the high ones or something like that. They donated money. They were like, Kevin, can you do a fundamental analysis on Fat Brands? And I'm like, listen, we looked at it, and then afterwards we're like, listen, if you want to understand what bad financials look like, look at Fat Brands. It's literally a company with $1 million of like cash, and somehow $1 billion of debt due within the next 12 months. Like, I don't even understand how it's possible. It makes no sense, but whatever. Shout out to those of you joining just in the last hour here who joined the Reinvest AI membership. James, thanks for joining Reinvest AI. Trey, Malvin, thanks for joining. Malvin actually just joined both. Malvin followed the instructions. Look at that. Malvin joined the Meet Kevin membership using the Black Friday coupon. And then it looks like you also then joined the Reinvest AI. After you join one of them, you kind of get the inside coupon, if you will. So good for you. You bundled up, basically bought both. Thank you so much, Malvin. Kai did the same thing. Welcome aboard. Meet Kevin membership and Reinvest AI. Welcome aboard. Evgeny, I'm definitely butchering that name. Reinvest AI, welcome. Derek, Reinvest AI, welcome. Jason, Nathan, Mark, Venkanala, Reinvest AI, all of you. David, Kevin, Reinvest AI, welcome aboard. Thank you so much for joining and believing in what we're doing over at HouseHack and Reinvest.co with the AI. So very good. And then keep in mind the Meet Kevin membership will have the new Reinvest course as well included for free. So broadly, I think this is good. This is all very consistent. I think our CME group on Fed rate cut odds are at like 86% right now on FedWatch. So FedWatch, next Fed day is in 13 days, 21 hours. The odds of a rate cut are 84.9%. The Beige Book really suggests this is going to be a one and done rate cut. So it does suggest we're going to get a hawkish Powell after this rate cut. And it probably won't be until Kevin Hassett comes around that we can really set up for more cuts. You do have the 10-year Treasury dropping just a smidge below 4%. Bullish, obviously, real estate, bullish mortgage plays to see this kind of reversal down, which is great. And if we jump to the 10-2, look for stress. Stress is slowly evaporating here, slowly coming away. So 10-2 now down to 51, which is great. It should mean that CNN greed and fear index is going to come out of extreme fear, and we're going to start getting into fear and then maybe back to neutral. Still sitting at 18, though, in extreme fear. Market momentum clearly rebounding, already back into the fear territory versus extreme fear. Breadth is coming up. We've got put-call ratio already declining, people getting burned on the puts, volatility falling here, VIX coming down nicely. Let's see here, VIX, take a peek here at the VIX. Yeah, I mean, look at this. This is nothing to see here on the VIX. Really, broadly positive here. So let's see, and let's take a look at some of your comments here. How do you feel about the 25 BP cut versus not? Well, I think we're gonna get it. I've been of the mindset that we're gonna get it, even when we went to a 40% chance. Oh, we're not gonna get it. I'm like, we should get it. In fact, I remember saying when the EDP report came out, I'm like, just watch. They've got another week to talk up a rate cut, and they'll talk the rate cut up again. The blackout window starts Friday for Black Friday. That's when they stop talking. And stop talking up a rate cut. So they've done their job. You know, I think maybe if you get one more speaker between now and the blackout window that just reiterates, yeah, we're going to go for a cut, you'll be at over a 90% chance of a cut. The market's going to be bullish on that, which is great. Somebody says, what's the difference? Wait, what's the difference between the Meet Kevin membership and the Reinvest AI membership? They're totally different things. Totally different. Sorry for not clarifying that, okay? So one's at meetkevin.com, one's at reinvest.co. Okay, so meetkevin.com. It says it like really clearly here. Meet Kevin membership. All 9 courses, trade alerts, every private live stream, the alpha report, the stocks tab, all the stuff that you would expect from trading, stocks, real estate analysis, real estate courses, whatever, all the course stuff, education stuff. Meetkevin.com. Okay, that has the Black Friday sale. The Reinvest AI is just its own app that we're launching in December. And there's a foundation membership that you could get in to get lifetime membership to it. So all of those future features that come out in our 2026 development phase, that's the Reinvest part. Separately, if you want to invest in the company, you can also scroll down and invest in the company itself as well. It's kind of like you got 3 things, right? Meet Kevin membership, it's like alpha reports and stocks and stuff. Reinvest AI, it's the AI app, boost net worth, right? Hopefully, potentially, right? And then you can invest in the company. So try to keep it as simple as possible. Don't want a cereal box aisle, folks, but sorry if I didn't explain that as clearly as possible. But the Black Friday sale is up. So, okay, good. So, but yeah, I mean, I was using that as also just a way to sort of gauge like AI revenues. And if we're seeing this explosion in AI revenues, it's great because it actually is positive for the AI bull run, right? Because if AI startups can actually make good money, then that's great, right? So anyway, yeah, there you go. Somebody said, yeah, ADPAC. I don't, I've gotten certain zip codes in the country for some reason are having trouble getting into the SSL cert. My Cloudflare says everything is fine on the Reinvest site. I mean, we pay for SSL, so I'm not exactly sure why certain zip codes are hitting that issue, but keep trying. Otherwise, I can also link to you just the direct. Yeah, no issues here on the scan. Managed rules. I mean, that's fine. Okay. So the only other thing that I could do is just direct you directly into the Teachable link if that's not working, which I'm fine doing. So I could go to reinvest.co, get our AI, click the lifetime access button, and then what I'll do is I'll just drop it into the live chat here. So there you go. There's the link for you. So if for some reason that's not working, but broadly, all of our SSL settings seem to be fine. But there is, I'm getting a bandwidth limit. Maybe that's why. Okay, so many people are hitting the damn website once again. I literally just upgraded this once again. We are exceeding the limit. All right, let me try. Maybe that'll work. Jeez, dude, how much am I gonna have to pay for a freaking website? What the hell? Whatever. Upgrade to scale. That sounds expensive. Holy crap, dude. Maybe that'll fix it. All right, F it. I'll upgrade really quick. See, and like that's what happens. Like more people spend money on our stuff, and now we have to upgrade all of our stuff. That generates more revenue for them. More revenue for Cloudflare, more revenue for Framer. It's crazy. How did we go over the limit again? I mean, you saw it here. You saw that we broke the limit. Like, this is live. So that's crazy. All right, well, hopefully that fixes it. So that's crazy. All right. Oh, a couple more of you just joined. Thank you for joining. Donato just joined. Robert Testa just joined. Welcome aboard. Yeah, it's that vertical line keeps going more vertical. Like we are up right now from yesterday. We are up 1,269%. That's crazy. All right. Anyway. All right. I gotta go. Somebody says Kevin is proof the consumer spending. Well, I think it's. I don't necessarily think that people who are buying this are just consumers. I think people are looking at this as an investment, right? Like people who buy the Alpha Report, they're investing in their future, in whether it's financial education or just learning how I do fundamental analysis. I mean, I do this like every single day. I've been doing this every single day since like 2017. Real estate every single day since like 2010. Like even if you get like one aha moment, like it's probably worth what you paid in the courses. You get one aha moment or like, oh my gosh, that's a good deal. Like one good deal that the Reinvest AI finds you over the next 20 years. You paid 19 cents a day for something that explodes your net worth. Like you get a wedge deal that boosts your net worth 100 grand and you paid 19 cents a day for 20 years. Like, dude, the ROI on that is insane, right? 100x return. And then obviously people who are joining the Reinvest AI are boosting the potential future valuation of HouseHack. Remember people who are investing in HouseHack, they're still investing in the valuation before we had an AI product we were selling. Now I'm like, oh my gosh, maybe we got to stop taking investments at this valuation. But whatever. Anyway, all right. So, but I do see it as like, it is a little bit indicative that people are willing to invest. And that's a good sign. If people weren't investing in these products, then that would be very bearish, right? So now I do still think we have bearish catalysts. The labor, like I've been, this is why I try to keep the bull bear scale because, people are like, oh, but Kevin, your title's this, your title's that or whatever. It's one of the reasons I try to keep the bull bear scale updated. And the bull bear scale is at 5 right now. Here, I'll actually go update it on the Meet Kevin website. I'll show you where you can get the bull bear scale for free. But I do talk about the bull bear scale on a regular basis in the Meet Kevin membership on a daily basis. But I'll update it at meetkevin.com/data. I'll update it there. So it's a 5 is where I sit right now. So that's going to be as of 11/26. Publish. Broadly. Okay. Those, no layoff cliff yet though. Beige book strong. Okay. And this is they've got like 2,500 economists over there at the Federal Reserve collecting this data from people. So there you go. If you go to, this is free, okay? If you go to meetkevin.com/data, this is kind of where I put my little bear bull scale indicator. And it's been sort of vacillating around like 4.9 to 5.7. And I keep a log so that way it's like we can keep ourselves honest. Like, are we flip-flopping or have we been pretty consistent in the middle? We've been pretty damn consistent in the middle. And so it's very, very consistent. Obviously, I mean, there's new data every single day that we try to incorporate into this. But yeah, I mean, what I'm seeing with revenues here, I think is bullish. And if anything, maybe, takes that up a little bit. But so anyway, yeah, there you have it. I gotta go. I appreciate y'all being here. We'll do some more Q&A later, and we'll see you later. So thanks so much, and happy Thanksgiving tomorrow if I don't see you.